Yeah, you also mentioned in one of your pieces the speed at which this happened, 15 days to go into a bear market, meaning a 20% decline from peak in U.S. equity prices.
Absolutely. If you look at the global financial crisis or the Great Depression of the 1930s, were slow motion train wreck. They started with a financial shock, stock market crash in one case, bust of housing and mortgages in the other one. Then the economy slows down. Then you go into a recession. Then you have distress in debt markets. Then you have a rise in unemployment rate. Then it becomes acute in the case of the global financial crisis around the collapse of Lehman. And in the case of the Great Depression in 32, 33, in which we go into a Great Depression. So yeah, you had the collapse of stock markets of 50% plus in the previous episodes. You had the credit spreads going to the roof. You had the debt crisis. You had massive bankruptcies. You had the economy tanking and GDP growth becoming vastly negative. You had unemployment going to 10, 20%, but it took 3 years. This time around, it didn't take 3 years. It didn't take 3 months. It took 3 weeks. In 3 weeks, you had a drawdown of the market of 35%, the fastest bear market in history. Usually it takes about 3-4 months. This time around, it took 2 weeks, 15 days. And you got then the credit spreads that went for high yield from 300 basis points of a treasury to over 1,000 basis points. Last time around, when those things happened, it took about a year. This time around, it took literally less than 3 weeks. And same thing for economic activity. We are going to negative growth in a matter of weeks, and it's going to become much more severe. And by the second quarter starting soon, we're going to have economic activity collapsing at the rate of 30% per year. And unemployment rate is skyrocketing. The number came out recently about unemployment claims. And the number before was 200,000. Market were expecting 2 million. It ended up being 3.3 million, 15 times higher than the average, not even 10 times, much worse than expected. So all these things have happened in 3 weeks, not 3 months, not 3 years. This is like an asteroid literally hitting planet Earth and stopping economic activity everywhere. Usually in previous recessions, you might have a recession in Europe, but not in US and China. You can have a recession in US, but not in the rest of the world, or vice versa. This is a case in which we have a synchronized global recession literally happening all at the same time and going from economic growth to negative, sharp growth in a matter of a month. We have not seen anything like this ever before. That's why this is worse than the Great Recession of 2007, 2009. The risk is we're going to end up into a greater depression, even worse than the depression of the 1930s.
Yeah, that chart for new unemployment claims is unlike anything I've ever seen before.
Yeah, absolutely. Markets were talking about initially a correction, then a V-shaped recovery, where you have one growth that is slow or negative and then fast recovery. Then people start to say, well, maybe it's not going to be a V, maybe it's going to be a U, like the global financial crisis, a downturn and then a gradual recovery to potential. Then some people started to say, well, it's going to go down and then it's going to stagnate. Or people start to talk about a double dip recession, a W. It's not a V, it's not a U, it's not an L, it's not a W. Currently, it's an I. It's a straight line which you have free fall of everything. GDP, consumption of goods, of services, capex, residential investment, import, exports. Pretty much every component of aggregate demand is collapsing. The only one that can actually use his balance sheet to support economic activity, and a free fall, of course, is the government. We're going to talk about it. But everything is happening at the speed we've never seen before, and it's a free fall. Numbers like these and the speed at which are occurring did not even occur during the Great Depression. It took 3 years between the stock market crash of 29 and 1932 when we got into a real collapse of economic activity and a spike in unemployment rate, not 3 weeks. This is totally unprecedented.
Yeah. And for those who may not have followed your work as closely as I do, the reality is over the last several years, in fact, in the recovery from the Great Recession, you've actually, despite your nickname, been very constructive about U.S. growth and about U.S. equity. So this is really a significant turn from the position that you've held for some time now.
Yeah, usually people refer to me as Dr. Doom. I prefer to be called Dr. Realist. And on many occasions before, Like, for example, in 2015 and 16, where people were worrying about hard landing of China and the global recession, I said, no, China is going to have a softer landing. It's going to be bumpy, but it's not going to trigger its own collapse and a collapse of the global economy. Or in 2015, when people said, even on Wall Street, the baseline and consensus was Grexit, that Greece is going to leave the Eurozone, and that's going to be a nightmare for the Eurozone. I followed it carefully, and I knew in that game of chicken between Greece and the rest of the Troika, Greece had not the upper hand, and therefore they're going to stay in, and therefore the contagion and the collapse of the Eurozone will not occur. Or my signal, that is this boombust.com signal, the boombust.com signal, tells you when markets are overbought, and we got right, literally, something like 8 out of the 10 correction that occurred in 2010 for the S&P 500, because there have been a number of corrections, but we also got right at the bottom. So whenever the market was going down, then when it would recover based on the macro dynamics and the financial dynamics and the macro fundamentals. So the markets have been going up and down. The economy has been slowing down and accelerating. I've been constructive. I've been warning, of course, about a number of downside risks in the global economy. But I guess this time around, people were totally delusional, thinking this will be a correction or a V-shaped recovery. This nonsense was repeated in January and all of February into literally the middle of March. It was only recently when people gotten finally a reality check and realizing this is worse than the global financial crisis. And we've had a drawdown, not of 10%, not of 20%, of 35%. And even now people are saying we reached the bottom. And from here, there's going to be a rally and we're going to finish the year maybe higher than when we started. That's the view of many Wall Street commentators, that now because of the stimulus, then the economy is going to recover, the market is going to reach higher than the beginning of the year. I don't know what they are smoking, something strange, frankly speaking.
You know, Nouriel, one of the interesting things that you've written about in terms of your frame for how to determine whether this becomes a greater recession or a greater depression, you have listed 3 broad categories that you're focusing on in terms of watching government response. The first is pandemic containment. The second is the monetary response, and the third is the fiscal policy response. Could you talk a little bit about those points and what it is that you're watching specifically to determine what trajectory we're headed on next?
Well, the first one and the key element of it is really the health policy response, because unless you're going to stop these pandemics, if it's going to be millions of cases and millions of people going to die, then there is no way you can restart economic activity. And I think that the lesson that came out of China and also what happened in some of the Asian countries and also the lesson out of Italy that initially did not take it seriously and now is following a Chinese style of quarantine is that really you have to have the right policy response. That means from very beginning, massive testing, massive essentially tracing of people. You need to have social distancing and social isolations. You need quarantines. You need lockdowns. And the quarantines and lockdowns, unfortunately, cannot be voluntary. Because if they're voluntary, people don't take them seriously. I mean, I'm all in favor of democracy, but China, literally, people getting out of their homes without a good reason, you're kicked back home, or you can be arrested, or you can be fined. Eventually, even Italy implemented that one. I mean, what has happened in the US with people partying during spring break or taking it not seriously throughout the country is nonsense. The lesson is that either you accept the economic pain that the country is going to be shut down, and of course GDP can fall 30, 40% for a quarter or two, but you need to do it. You shut it down and then you stop the spread of the pandemics. And like in China, now you can restart gradually economic activity. So you have pain, but it's front-loaded, it's short, and then you have a recovery. But if you don't do that response, then the thing is going to spread like wildfire, and it's going to be too late when you're doing the mitigations, and mitigation policies are not sufficient. You have to go from nothing to serious mitigation to serious suppression, and then you can restart economic activity. If instead you do mitigation or mitigation light, and it's spreading like wildfire because it's not enough, then eventually you'll have to do even more severe shutdown of economic activity. So it's better to take the pain front-loaded for 2 or 3 months and then jumpstart growth rather than doing stop and go. You stop, then you go, then you have to stop again, and then you go again, and so on. And it's going to end up being a nightmare where everybody's going to get sick, and then millions of people are going to be dying. I mean, this past week, Dr. Fauci now, and even the US government says, we'll be lucky now. We'll be lucky if we have millions of cases, and we'll be lucky if the number of dead people is only between 100 and 200,000. And Trump on TV on Sunday night said, hey, if we have number of dead being between 100,000 and 200,000, we would have done a very good job. 200,000 people dead, and that's a very good job. And that's optimistic, because at the rate at which this thing is going in the United States, you're having 20% increases of the cases literally per day. We're going to have 5 million cases at least by the end of April. Could be 10 million, could be 20 million, could be 50 million. And then the numbers of that is going to be not 100,000 or 200,000, could be 500,000 to 2 million. That's what we're facing. So yes, the health response is key. Unfortunately, we're not doing the right thing on the health side.
To put some of those numbers into context, that even at the low end of the estimate, 100,000 Americans dead is twice the level of the casualties we experienced in Vietnam, which is, of course, one of the great sort of national tragedies and traumas of the 20th century. Nouriel, where do you think we are in terms of a letter grade based on where we are today? We've made some improvements. We've got a while to go. What's your view of that?
Well, there are three elements of the policy response. On the health side, I think it's a near fail. It's really embarrassing, because in China, the number topped at 80,000. Now, they may be lying. Might be not 80,000, but maybe 200,000, 300,000. We don't know. And the number of people might not be the few thousand that they announced. Maybe 3,000, might be 10,000. We don't know. But we know that the number is not in the millions in China, and people are going back to work, and that's a risk, of course. But in the US now, the government is telling us our baseline is going to be a few million people, and between 100 and 200,000 people dead. That's considered by the president a very good job. It's just unprecedented. The fact we're going to accept that, because now the genie is out of the bottle, they cannot deny anymore that we totally screwed up, that we were first doing nothing, then doing mitigation light, then more mitigation light. Then the president wanted to essentially even go back to business as usual after April 1st or after Easter. And only once his advisor told him, you're crazy, you're nuts, now he's saying, well, we're going to continue this mitigation light, because it's not even serious mitigation, because we're not doing testing and isolation and compulsory quarantines and lockdowns the way other countries doing. So we're still in mitigation light, let alone trying to do suppression. And we're going to get millions of cases and hundreds of thousands of people dead. That's our baseline right now. And it's scary compared to even other bad examples like Italy. Italy is getting it under control right now. They started too late, but now the rate of increase per day has gone down to less than 10%. Eventually it's going to stop, because they've done draconian style, Chinese style of lockdowns. That's what we should have done 1 month ago or 2 months ago. We totally blew it up. So on the health response, to me, it's a fail. Accepting that 200,000 people are going to die is a fail, is an F by any standard. It's not even a D, it's a fail. Now, the better news are on the macro policy response, both monetary and fiscal policy, with some caveats. On the monetary side, both the Fed, ECB, and other central banks have massively front-loaded every type of support of the financial system. Again, during the global financial crisis, it took them maybe 3 years to do the entire kitchen sink of unconventional monetary policy. Now it took them literally less than a month, and most of these decisions were not made at formal meetings of the Fed or ECB, but outside of them in inter-meetings. So we've gone back to zero policy rates or more negative in some parts of the world. Quantitative easing, forward guidance, credit easing, this purchase of private assets, backstopping of banks, of non-banks, of primary dealers, of investment banks, of other financial institutions, backstopping of money market fund, of the money bond market, of commercial paper, of investment grade bonds issued by corporation, pretty much flooding the market with unlimited amount of liquidity unlimited amount of QE. Literally, all the tools that were created over time during the global financial crisis, they took them out of the toolbox and then brought them back in a matter of a month. Everybody's doing the right thing. And in an emergency like this, providing liquidity, preventing that illiquidity is going to become insolvency is a necessary but not sufficient condition. Now, the third element of the policy response, it's a mixed bag. On this one, the US is ahead of Europe and other parts of the world because in addition to the monetary bazooka, they're also doing the fiscal bazooka. Now, the $2 trillion of the fiscal stimulus is not truly $2 trillion of stimulus because a lot of it is just credit guarantees to small enterprises, to the corporate sector. The actual fiscal impulse of how much you spend directly or you transfer to the private sector households is less than that. It's less than $1 trillion. But, you know, the amount of, it says, liquidity and lending support, you could say is going to be closer to $2 trillion. So we have the monetary bazooka, we have the fiscal bazooka. Is not optimized in terms of reaching those who need it the most. I think too much money is going to go to large corporations who don't need it, not as much money to households that are desperate in the United States. Think of it, in US, 40% of households have less than $400 of liquid cash to deal with an emergency. People are not going to have money, even with these checks, to buy food. If you're that household and you have lost all of your income, and half of the economy is not fully employed people who have unemployment insurance, healthcare, and access to paid sick leave. You have all these gig economy, contractor, freelancers, part-time workers, hourly workers, entrepreneurs that are business of one, self-employed people. Literally half of the economy is like this. If you live like me in New York, anybody works in hotel, in restaurants, in bars, in theater, band, in music, they're not employed. They're just there as gig economy workers. They get paid by the project or by the day and so on. The income of these people has gone to zero. These people don't have money to pay rent, and either there is a rent moratorium or they're going to go and stop paying rent on their own. They don't have money to pay their utility bills like electricity, water, gas, internet, phone. And the amount of money they're going to get from the government is going to be barely enough to pay for food and essentials for a month or so. Literally a month or so, because people have less than $400 of cash savings. So unless you're going to double down later on that subsidy to the households, you'll have people who don't have enough food to eat. They're going to go and riot in the streets, and you'll get riots and people mobbing the supermarkets. We could have civil violence down the line. That's the situation. So we're doing the fiscal, but the other countries are not doing it, but we're not doing enough of the right targeted fiscal stimulus. So in summary, the health response is an F. The monetary response is an A minus, and the fiscal response is at best, a B minus right now. But even with that, my fear is that we may end up not into a greater recession, but in a greater depression for a number of reasons that are not related only to these points, but also to other ones.